Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, March the 15th. The year's 2022. Let's talk trading. Trading Better, Part 8. These videos are for educational purposes only. Your results may differ from mine. Okay, one of the things about trading better that I may have touched on earlier, but want to talk about it a little bit more today is sticking with it. We talk about focus and we talk about paying attention, but we need to also realize that, sticking with it, with whatever method that you're using, just sticking with it through thick and thin, giving it time and giving yourself time to actually master the method. Not to mention, your risk management and your brain management. Because I see it a lot, people changing what they're doing. I mean, you could all say, well, but look at you, TRO. You come out with a new indicator, or two every month or something. But yes, that is true. But usually, as I've mentioned before, a lot of them are statistical, and many of them, if not most of them, draw horizontal lines, because that's what my trading's based on, is finding those levels where if you enter the trade in the direction of the candle color, statistics show that you'll have a chance to take profit more often than not. I mean, it gets down to that. But, the big thing is sticking with it, using your risk management, sticking with that, not messing around with it, not changing it, not deviating from it. Sticking with your brain management, making sure you're not falling back into old habits and thought patterns. I mean, if you feel yourself getting mad, it's probably because one of these. And if you have one of these, you have to see what you did or failed to do that caused you to have these and correct that. It's not, your method doesn't do any of this. This is all inside your head. And also, something else is your money management. The big thing, taking profit before the market takes it back. I mean, it's relatively easy to find yourself up a pip or two when you stick with your method. But the question is whether or not you take it before the market takes it back. Because that first pip or two really is the hardest. Because once you get past 2 pips, then you could probably relax a bit, still stay focused, still stick with the trade, but you're not going to see that profit and loss, go from red to green back and forth, or red to black, or whatever colors you're using. It's just something to think about. So, for example, I think, was it yesterday we were at the monthly low? And now we're 71 pips off of it. It's one of those things where if you're a reversal trader, if you stick with your method, sooner or later that daily, weekly, monthly low, or current daily, weekly, or monthly low is going to be the final daily, weekly, or monthly low. And ditto for the high. So remember, I stated we have missed, so far we have 3 missed weekly pivots in a row. Well, now we're only 25, 26 pips away. Probably a good chance we take out that weekly pivot this week. Considering we also came through that weekly lower wick zone, we already went through the bottom of it, or through the previous week's low. Now we went through the previous week's close to the upside, breaking out of that lower wick zone. Oh, and we still have 2 pairs that didn't fill the gap. And speaking about the weekly, we see here on the weekly opening range, it looks like we may just have popped through it. No, not quite. We missed it by about half a pip here, it looks like. And that weekly low, daily low, it looks like, can't tell if we broke it or not. We'll have to look at another chart here. Let's see. Yeah, it looks like the yearly low was put in today. Let's see, 2991. Trying to get this. Yeah, it looks like the yearly low was put in yesterday. So it looks like we've bounced off that. At least on this particular broker. Some brokers you may have established it since it's so close. Inside bar action is all, looks like it's all on the monthly. Very few. We've only got 1, 2 here on the weekly, it looks like. And we've got a handful on the daily. $78 pip range. We've got 2, 4, 7 pairs over 100. And this is something that's definitely been changing over the past few years. We've seen the ranges decrease. The average has decreased. We don't have those big pops like we used to. Back in the day, the pound would range about 150 pips every day. Now that's more like an anomaly. And we look here at the buy zone. Notice we never even hit the short zone today. A couple opportunities to go long, and then we crisscross that weekly open. Finally, we have a nice push to the upside here. Red rats, get ready to feast. Wait for your trigger and take your short. One of which was the psychological 75. We took out today's pivot, heading toward the weekly pivot. Let's see. It said near R1 bias is short. That didn't pay. Maybe it paid out a little the first time. So we took out today's pivot. We still have a couple of missed pivots in March, and one from February and one from January of this year. On the weekly, 3 missed pivots in a row. Let me see how many, just to take a look here. We're doing 5,000 bars. Wow. So out of 5,000 weeks, we've only had 3 in a row, 23 times. That's less than 1%. So there's a high probability, based on statistics, that this is going to get taken out. We're in the upper wick zone from yesterday. And remember, We didn't make a new high. We didn't break yesterday's high. We didn't break yesterday's low. We might produce an inside bar unless something happens. We still have plenty of time for price to break out. On the higher low, lower high trades here. Yeah, let's see. It was calling for a short here at 74.9. Call it the psychological. It gave you 1, 2, 3 opportunities to take that trade. And you can see those opportunities produced almost 10 pips first time and 10 or more pips. Or 10 pips the second time and a little over 10 pips the third time. So this is one of those times where you stick with the method. You see price has been oscillating. So maybe out of those 10 pips, maybe you grab 3 to 5. Or if you can do it, you let that first candle close. See on the break here, like see here, 1, 2, 3 times. It finally broke this level here. Came back down, hit the previous lower high level here, and then turned right back around and came back up, back down, back up, back down, now back up. So by trading these over just the past hour or so, you can see how many opportunities this method produced. So let's see, if you took it from, let's just take it from this low. So 1, 2, 3, 4, 5, 6, 7. So let's just say 7 times 5 pips. That's 35 pips. That's not a bad day. That's just taking half of what was available. So if you stick with the method like this, it's going to produce the opportunities. You're going to win every time? No, you're not. But it's one of those methods where if you just stick with it and wait for your signal, you should have an opportunity to take a few pips off the table. Wall method, or simple price action at horizontal lines based on the H1 candle color open. So you can see here we had the previous H1 high. You had the wall line at the 70. So look at how many times there, if you just took that trade, there was an opportunity to take profit. Even if you only took 2 pips, that'd be 1 time, 2 time, 3 time. That's 6 pips this hour. Not too bad. Maybe you took more, maybe you didn't. But in this particular hour, your stop loss was never even threatened. Last hour at the 60, previous hour go long at the 40. It's just, once again, sticking with something and letting it pay off for you. I pulled up the ATR chart and see here, because of the ATR, the range was 102%. We were saying anything over 50 was okay, but sometimes you wait for it to get high, where in this case the current range is a 102%, saying it's okay to reverse. Once again, simple method that you can stick with. So, fellow traders, if you have any questions on sticking with your method, we might even talk about it a little bit more. Feel free to ask, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.